Hi, this is Steve Davis over at Total Wealth Academy, and this is Misconception Monday. The misconception we're going to discuss today is that your home is your biggest asset. This is far from the truth. In fact, your home is actually your biggest liability. Remember this rule: assets put money in your pocket every month. Liabilities take money out of your pocket every month. What does your house do? It takes money out of your pocket. If you have a mortgage, you're paying interest and principal every month. And of course, there's insurance and taxes, garbage, gas, electric, maintenance. It's taking money out of your pocket every month, so it falls into the liability category. Now, is it better than renting? Absolutely. It's more like a savings account than it is an asset, because the money that you put in there, you get most of it back. Notice I didn't say all of it. You get most of it back at the end of 20 or 30 years. So let's look at this graphic over here to explain it. Let's just assume on the same day you go out and buy a home for $200,000 to live in, and you buy one rent property for $200,000 and you lease it out. First off, even if your interest is really low, down at 4%, you're going to pay $137,000 in interest over the 30 years. Taxes at about 3% are going to be $180,000. Insurance at about 1.5%, that's going to be about $90,000 to insure it during the 30 years. Maintenance, about $120,000. So your all-in cost over the 30 years is $727,000. But let's assume that each of them triples in value over the 30 years. So now it's worth $600,000. You sell it. You have a check in your pocket for $600,000. But it cost you $727,000 to get that $600,000. So you actually lost $127,000. But do you see why it's better than renting? Because at the end of 30 years of renting, do you get a check for $600,000? No. If you own a home, at the end of the 30 years, you get a check for $600,000. So it's way, way, way better than renting. But do you see what I mean by it's really kind of a savings program? You put the money in and you get most of it back, and you get to live free for 30 years, if that makes sense. But let's look at the difference between a liability and a true asset. See, everything's the same: interest, taxes, insurance, maintenance. The all-in is the same, $727,727. But you had rental income during those 30 years of $630,000. And you ready for this? I didn't raise the rent during those 30 years. So you can imagine it's going to be way, way, way more than that because of rental increases, but I'm trying to keep it as simple as possible. Your profit is $503,000. That's in your bank account. $503,000 that you profited. If you did that 10 times, that's $5 million that you would have. Just 10 little $200,000 rent houses. 30 years from now, you're going to have $5 million. Again, a home is more of a liability and really more like a savings program than an asset. But rental property is a true asset, and you can see the difference. The difference is $630,000 when you add those two together. So keep in mind, your home is not an asset, it's a liability, but the positive is it's at least like a savings program. So be cautious. If your financial planner says, buy a bigger house, ignore him or her. Buy the home that you need, that makes you happy, that takes care of your family. That house is there to serve you, and really it's not there to make you money. So keep it simple, buy what you need and nothing more. Don't keep buying bigger and bigger and bigger houses to impress your neighbors and your relatives. Live within your means, because that home is a liability. That's Misconception Monday. Thanks for watching.